Hi there, it's Liz Williams with Williams Accounting. It's Friday night on the 30th of January, just about 9 p.m. So I hope you all had a great week, great successful week with your businesses. We are doing very well here. We are keeping busy with getting ready for tax season. And before tax season, we have to finish our payroll quarterly reports for the fourth quarter. We need to do our year end quarterly reports and returns. And we, of course, are distributing W-2s and e-filing them with the Social Security Administration. And if you are an Idaho business, they also have to be e-filed with the state of Idaho. As I was working on kind of the fourth quarter and the process of closing the year out for our payroll clients, I've been talking with some of my corporate officer clients that are on payroll that it makes more sense for us to voluntarily elect that you pay state labor tax on yourself. And I'm copying this Zoom on an email to my insurance agent and to our tax attorney and my tax manager just to make sure we're all on the same page. But we legally can add you as an employee paying labor tax. And think about it. Either I'm doing an IRS 940 and we're paying $420 a year for you, and you're not getting really much benefit for that, or we're paying IRS 940 $42 like we do for all of the other employees. So when we process payroll through our payroll program, it is literally forcing us either to the 420 for you or for the $42 for you. And if you are at the $42 pot, you have to be voluntarily paying labor tax in whatever state you're in. So labor tax, for example, for the state of Washington would be Washington State Employment Security. It would be the family leave, the CARES, such as that. I'm going to check with the insurance agent to see if there's a labor and industry requirement. As far as my payroll program, it only requires certain labor taxes, not all. So we're going to do some research on that. But either way, you are being voluntarily included in all of the labor tax that we can, especially if those of you that don't have a good insurance policy. If you get injured on the job and you don't really have very good insurance, or you cash pay for chiropractor visits and vitamins and supplements, if you have a true injury at work, I think that it's prudent for you to be covered on the job by this voluntary labor tax. So for Washington State, we're talking about, well, we just talked about Washington State. Sorry, it's late. For the state of Idaho, it would be Idaho Department of Labor. And then their L&I in the state of Idaho, their workers' compensation actually comes in the form of an insurance policy. So those of you that are Idaho clients, you're very well informed of that. And we have a great insurance agent for those of you that have Washington companies that need workers' comp and liability insurance. But I'm just putting you on notice as you see the fourth quarter returns, as you see, 2024 W-2s and payroll returns, that you may see labor tax, or you may see some amendments of the first, second, third, and fourth quarter of 2025. So that way you are eligible for that $42 FUTA, which if you add up all of the labor tax that we're going to be paying on you, that you're going to be paying, and that I'm going to be processing, it's actually less than the $420 a year or close to it, and you get far more benefit. So there you go. I'm sorry about TMI, but you know me. I want to be sure you absolutely understand what we're doing. If you have any questions on this, please feel free to reach out after the 31st of January and not before. Okay, hang in there. Bye.